Imagine a world where a brand new, gleaming Bentley, the kind of car that turns heads and screams success, doesn't actually cost its wealthy owner a small fortune. In fact, imagine that this six-figure symbol of luxury ends up being significantly cheaper, or in some extreme cases, almost free. This isn't a fantasy or a special sale at the dealership. This is the reality of the financial playground enjoyed by the wealthy, a world built on a foundation of legal loopholes and strategic accounting that turns personal desires into legitimate business expenses. The average person buys a car with money they've earned and already been taxed on, feeling the full weight of that financial decision. But for the business owner or the high-earning professional, a Bentley isn't just a car, it's a tool, an asset, and a masterstroke of tax planning, all rolled into one leather-lined, handcrafted package. The entire scheme revolves around one powerful concept: reducing your taxable income. When you make money, the government takes a slice as income tax. The less income you show on paper, the less tax you pay. This is where the magic of business expenses comes in. The tax rules in many countries, like the UK or the US, are designed to allow businesses to deduct the costs of running their operations from their revenue before calculating their profit, which is what gets taxed. A legitimate business needs vehicles. Right. For deliveries, for visiting clients, for transporting equipment. So, the cost of those vehicles can be written off. The wealthy individual simply positions their Bentley as one of these necessary business vehicles. They create a company, perhaps for consulting, property investment, or even a holding company for their various ventures. This company then needs a high-end vehicle to project an image of success and reliability to potential clients, to travel to meetings in comfort and security, and to serve as a mobile office. Suddenly, the Bentley is no longer a personal indulgence. It's a crucial part of the company's brand and operational strategy. The company, not the individual, buys the car. The money used to purchase it comes from the company's pre-tax revenue, meaning that chunk of money never gets hit with income tax. For someone in a high tax bracket, this immediate write-off can be equivalent to a massive discount, funded by the taxman. But the initial purchase is just the beginning of the financial engineering. The real genius unfolds over the following years through a mechanism called depreciation. Depreciation is an accounting principle that recognizes that assets lose value over time. A business is allowed to deduct this theoretical loss in value from its profits each year, further reducing its tax bill. The government publishes lists of how quickly different types of assets are expected to depreciate. A standard sedan might depreciate over 5 years. However, there's a special category, often called a listed property exception for passenger vehicles, but with a twist for heavy vehicles. This is where the Bentley, particularly a model like the Bentayga SUV, truly shines. If a vehicle exceeds a certain weight threshold, often 6,000 pounds, it can sometimes be classified not as a passenger car but as a heavy-duty truck or van for tax purposes. The Bentayga, thanks to its robust construction and luxury features, often tips the scales just over this limit. This reclassification unlocks dramatically accelerated depreciation schedules. Instead of writing off the cost over many years, the business owner can often deduct a huge portion of the Bentley's cost in the very first year, a tactic known as bonus depreciation or Section 179 expensing in the United States. This creates a colossal tax shield in year one, potentially wiping out a significant portion of the company's taxable profit and delivering a windfall in tax savings that makes the net cost of the car astonishingly low. The financial benefits continue to flow long after the car is parked in the driveway. All the ongoing costs of running the Bentley are now funneled through the business and become tax deductible. The exorbitant insurance premium for a $250,000 car, a business expense. The staggering bill for a full tank of premium fuel, the company covers it. Routine servicing, new tires, and even unexpected repairs at the Bentley dealership are all paid for with pre-tax company money. For the individual, this is like getting these services at a 30 to 40% discount because they are being paid for with money that would have otherwise gone to the tax authorities. Even the interest on a company loan used to finance the car can often be deducted. The car becomes a gift that keeps on giving, a perpetual source of tax deductions that subsidize the luxurious lifestyle of its owner. To maintain the illusion, the owner must keep a meticulous logbook, detailing every journey and pretending to distinguish between business and personal trips. In reality, this log can often be creatively managed, with a trip to the golf club framed as networking with a client or a weekend drive justified as testing vehicle performance for business assessment. The line between personal and business is intentionally blurred into obscurity. After a few years of enjoying this heavily subsidized luxury, the final act in this financial play unfolds: the sale. The company, having written down the value of the Bentley to a fraction of its original cost on its books through depreciation, sells the used vehicle on the open market. Because Bentleys are well built and hold their value relatively well, the car often sells for far more than its now very low book value. This transaction creates a profit for the company, but it's a capital gain on an asset, which is often taxed at a much more favorable rate than ordinary income. So, the owner gets to use a beautiful car for years at a massively reduced net cost, and then they get to recoup a large chunk of the initial outlay in a tax-efficient way. The cycle can then begin anew with the latest model. This system is not an accident. It is a feature of a tax code that is built with businesses and capital in mind. It's a game where the rules are publicly available. But the pieces, the capital to start a company, the high income to shelter, the sophisticated accountants, are only available to a select few. For the wealthy, a Bentley is more than a car. It's a brilliant piece of financial engineering, a rolling testament to the principle that if you know the rules, you can build a system where luxury becomes just another smart and perfectly legal business decision.